Okay, so thank you. We are going to get kicked off. So welcome everybody. So this is the first Q&A session for the Obran Cooperative Search Fund Accelerator program kicking off in 2021. We're going to start by just reviewing a little bit of our agenda here. Specifically, this is looking at our accelerator program. We're going to go over the key features of what Obran is, give you a little bit of context, some background about who we are and what we do. And then we're going to talk about the accelerator program specifically. So really digging into some of the ins and outs and really what we are going to be working on together if we do, if you do decide to apply. And then the third thing, we're going to talk about key dates, so application deadlines, things like that, really what that looks like. And then we're going to use the last at least quarter of the time to answer questions. So as we go through, there's going to be a lot of information that's going to come at you all at once. Again, this is recorded, so I'm going to share this out with you as well. But please do put your questions in the chat itself. So at the end of the actual sort of presentation side, hold your questions through and I'll go through and answer them at the end. So a bit first about me. So I'm Joseph. Hello, everybody. I am actually the Chief Coordinating Officer for the Cooperative and running this program. So I'm really excited to kick it off and to get started. So let's just dig right in. Why are we here? So a bunch of reasons. If you're here, you probably have at least read the website and understand that we're looking at search funds. And search funds are answering an immediate problem, are answering a pretty cogent need in the business community for transitioning business owners of all shapes and sizes. We generally look at this as a silver tsunami, as something that aging out baby boomers looking to transition or looking for succession planning within their small businesses are having a hard time doing that. And more than that, trillions of dollars in wealth in the economy is about to change hands, and we totally recognize that as a potential opportunity for us. And when I say us, I'm going to talk a little bit more about what that means. But really, the other piece of why we're here is looking at cooperatives, and specifically looking at worker cooperatives as mechanisms to actually allow those baby boomers, those folks that are changing hands, or those businesses that are changing hands, to find a place. But most SMBs run into similar challenges across the board. So whether that's access to capital, growth mindset of the actual business owner, or management expertise, this is actually across the board some of the key characteristics of challenges that small business owners of all shapes and sizes face. We actually do see that there are other problems as well. Specifically, sellers of small businesses are running out of options. So when they're looking to actually sell to their family members, whether that be direct, mom and pop shops, or when you're looking at selling to the second or third generation of a family-owned business, these days, actually, millennials and our generation sometimes actually don't want to buy those family-owned businesses. The sellers do want a fair price for the thing that they bought. We actually do believe that that is part and parcel of what we're trying to do here. But when they look at a financial buyer, somebody that's solely in it for trying to actually transition that for profit, we also see that most family businesses and small businesses don't actually see the impact on the community that they want to have through that conversion or through that transition process. So those problems actually create a fairly unique opportunity for what we see. We are a worker-owned conglomerate. And so what that means is we are a worker-owned cooperative, so specifically employee-owned cooperative, that looks at SMBs, it looks at the lower middle market as an asset class, as an opportunity space for us to expand worker ownership through employee ownership through our cooperative members. And we also see this as an opportunity to have a conglomerated business model that leverages some of the things in the market that other small businesses might not be able to access. And we're going to run through that. But first and foremost, what is a co-op? So I know that sometimes you hear the word co-op and you think like soups and sandals and maybe like patchouli oil and a housing co-op, right? So let's throw that out the water first and foremost, that is not who we are. Who we are is actually on the right-hand side of this screen, the individualist cooperative model. And I'm going to walk through that a little bit, but let's start on the other side actually. Let's start on what a federalist model is. This is probably the co-ops in the business sector that you know about. The Ace Hardwares, the Organic Values, the actual small business cooperative federations that go to market together to buy products or to produce under the same brand, right? Small family farms banding together to sell Ocean Spray cranberry juice, right? We actually are not a federated cooperative of businesses, but rather an individualist cooperative or a member-owned, worker-owned cooperative. If you know of Equal Exchange, or maybe your local credit union, or even the Navy Federal Credit Union, those are all examples of individualist cooperatives. So one member, one vote, and those members are not businesses, those members are individual workers in our case. So building on that, our cooperative model takes a nod to what a conglomerated corporate structure looks like. So we do have subsidiary businesses, and I'm going to sort of walk you through this model overall, sort of the architecture of it, but I just want to give you a big picture here to start. So we do have employee members, we do have investors, we believe in growth through acquisitions, and we do hold real estate currently, and we'll talk a little bit about that in the future. But let's start at where I believe that we probably need to, which is the operating business itself. So every business within the cooperative, doesn't matter what business, is at least 51% owned by the cooperative. So we are majority shareholder in any of our business entities. We also hold real estate, and the same holds true. Generally, we have special purpose vehicles to hold those real estate assets. And in the transition of a sale, we can walk through this, but that generally is how we structure those transactions. So each subsidiary business itself has employees, has workers. And those workers become eligible for membership within the cooperative business through a general, through the same thing for each person. There is a financial obligation. There's a membership share price. They buy in. They do contribute 1% of their pay, every paycheck, to a worker ownership membership share. We do have a candidacy period, and basically after that candidacy period, we do have an sort of induction. We actually allow folks to join. What they get. They get both access to the patronage, so access to the actual profits within the cooperative, as well as a democratic voice in the cooperative itself and their member businesses. And I'll walk through that a little bit more in the future, but really our basis here is every workplace, every business, employee base is eligible for membership in the cooperative. Second thing is we do have a fiscally sponsored nonprofit project with our partner sister nonprofit called Democracy at Work Institute. This allows us to do things like the search program. This allows us to raise philanthropic support in order to do research and development, industry research, and looking at new product or new initiatives to develop out new programming. And lastly, we do believe that capital should be at the table. They should have a voice at the table, just not the loudest. So the way that we actually structure that is in two places. Both at the cooperative level, we have investor memberships, which generally is a position for our employee members that decide to leave the cooperative, as well as actual common stock equity at our operating company level as well. So generally, there are two places that outside equity sponsors can play within the cooperatives, within Obran cooperative space. And to be clear, this is not normal. So I want to make sure that I make that abundantly clear that we are not our prototypical cooperative. We are not an ESOP as well, and we'll talk about that as well. We are a worker cooperative conglomerate corporation, and we're one of the, I believe, one of the first of its kind. So a big part of this, a big central point of why we do this is our membership model itself. So let's look at what that really means. So a worker within the cooperative does become an employee. So they do have general wages, access to medical, dental. We want to be a high road employer and literally target the 90th percentile within a benchmark in an industry for pay, right? We also offer two very unique benefits on top of that. First is the democratic management. So we actually allow our members to elect the board of the cooperative, to set the strategy and pace for deployment of capital, to be able to say yes or no to executive compensation. And the second is member benefits for profit share, and actually the ability to have distributions of our patron equity. And so the way that that happens is, yes, there's a purchase price that actually does go into a redeemable capital account, but that itself is allowing those members to access the profit of the conglomerate, not just of their workplace. And that's very, that's very key here, is they access all of the conglomerate's equity, not solely just their businesses. And the last piece, or the second piece of our cooperative conglomerate, is we actually look at facilitated services and support structures for our underlying assets, for our underlying businesses as well. So coming into this as a searcher, you're entering into not just a supportive environment to do the search, but also a network of other businesses and entrepreneurs, leaders that want to grow their independent individual businesses as well. So access to things like HR, research and development, legal and accounting, combined insurance, whether that's health or individual business insurance, strategic counseling or consulting from the group itself, and access to capital in bulk. So we all go to the market and buy together. As well as supportive member services, so for the underlying employees to gain leadership skills, access member development, and potentially even things like governance training as well. And lastly, sort of our management model is a bit different as well. So we're specifically talking about a search fund activity, which looks at a CEO, which looks at an operator at the C-suite of a company. We believe in strong leadership, and we believe that entrepreneurs are the tip of the spear when it comes to entering into a new market opportunity and expanding that market opportunity. That said, we also understand that they need to be accountable to their shareholders, and for us, our shareholders are our membership and their community. And so the way that we actually structure that is by two mechanisms. One, the board of the individual subsidiary business has at least 2 representatives of the cooperative membership. So specifically, that is your employee base being on the board of the business that you buy and you being accountable directly to their bottom line too. So that's upward pressure from the actual workers and downward pressure from the cooperative for performance. And we believe that that is actually a great way to align incentives to actually make successful things in the market. Last piece here is where we are today. So ultimately, we are working across a couple of sectors already. And when we're looking at acquiring new businesses, we build out a thesis per sector first. And those theses help guide our investment within a space. So as a searcher, what does that mean? What do you do in our process? What is this thing called the Search Fund Accelerator program? So specifically, again, as I said, we truly believe in entrepreneurs. We think that operators, folks in the market that can make an impact, are our bread and butter. That's where we will be successful. And so when we actually look at a search, the way that we structure the actual acquisition is through a partnership with an entrepreneur, a partnership with the searcher. So we bring to the table capital resources, training resources, a book of business when it comes to, or sorry, a book of leads when it comes to actual program partners, which we'll get into. But really what we bring to the table is a structure for you to be able to move faster and offer a very differentiated and unique proposition to business owners that are trying to sell to the industry. So the way that that is structured as well is we create a stipended program over the course of a year to help fund and offset the cost of your own self-funded search, as an example. We then also allow you to participate in the equity, the actual underlying equity structure of the company you acquire. We finance the deal and don't ask for personal guarantees with the process. Lastly, is we partner with industry in order to provide viable deal sourcing for you to be able to actually go into the market itself. And lastly, post-acquisition, we help you grow it. And we want you to have a successful exit in 3 years. So let's walk through that deal process 3 to 5 years, sorry. Let's walk through that deal process one more time. So specifically, first, in the industry, top of the funnel, we actually partner with groups like Kaiser Permanente and CCA Global, which is a floor covering purchasing cooperative. We have deep ties into industry and really build out a thesis from a partnership development standpoint. We then actually go out and do the search. You do the traditional process, prospecting, which we help support, going out, talking to business owners and crafting a deal, which we help support, and actually doing this together with a cohort of other individuals that are operators in the business themselves. We line up third-party capital and have our own equity to sponsor the deal with. You then acquire the business under the cooperative and help transition that business to be successful within the next 5 years. You get a piece of that equity within the underlying business and exit through a repurchase from the cooperative. This aligns all of the incentives of both the workers at the underlying businesses. It aligns incentives of the searcher to actually grow the business. And it aligns the incentive of the cooperative broadly to grow in an industry, not solely in just one business acquisition. And the last piece is we're differentiated in the market. We're not an ESOP. We're not a retirement benefit and a retirement plan that is looking to actually, consolidate businesses. We're not an individual worker cooperative or one-off transaction that creates a small business, which is great in the market and keeps things local, but doesn't provide the back office support, the actual ability to have the conglomerated balance sheet of the cooperative behind it. We are, however, a worker cooperative buyout, and we approach a seller just like any other buyer would. We try and find liquidity for them where it's appropriate, and we try and balance the incentives for the long term. So why this matters also, there has been many studies about employee ownership, and outside of the social benefit, we're talking about the straight up business operational benefits of employee engagement. Employee-owned companies generally outperform the market. So this is a study for NCEO, the National Center for Employee Ownership, looking at benchmarks of the S&P 500 and the Russell 3000 about how the actual performance in similarly situated businesses over the course of 3 years actually operated, right? Actually were returns. And by far and away, the employee-owned firms overperform the similarly situated candidate firms. And so who is this for? So moving into like you, actually, the searcher. So we believe that, again, entrepreneurs are the backbone, but a certain type of entrepreneur. And so we want to be very clear and upfront about who we think is a good candidate for the search process. We're looking at folks that have a strong operator background. So that could be it could be MBA or Master of Social Science sort of backgrounds, or consulting and banking, right? So traditional sort of search process backgrounds, as well as managers within larger corporates or nonprofits that are looking for a transition. We are obviously incentivized to have other small business owners, so entrepreneurs that want to develop and grow a space and be more ambitious with their time to join as well. That's definitely a place. And as well, we believe community organizers, folks that actually understand the cooperative network and movement, have a chance and have an ability to have a strong partner in a deal. We think that we can lend a lot of chops when it comes to actually doing the deal itself. We think that folks that are motivated not solely by financial return, but motivated by the ability to actually grow a movement within a business. So have returns both, yes, financial gain for themselves, but also for the community, the businesses, and the employees that they build the business with. And lastly, we think that we need entrepreneurs. So just being very upfront with you, we're not looking for middle managers, right? We're not looking for folks that can withhold the status or uphold the status quo. We need folks that are, yes, good listeners, yes, systems level thinkers, but really go-getters and comfortable with a very high degree of uncertainty in a deal process, right? And who are we? So you will be working directly with a couple of the individuals within the cooperative itself. So specifically myself and Adam Rose, who's joined the call and can talk about his experience as a searcher so far, as well as Emma Ratcliffe, who's actually joining as an intern this summer to help stand this program up and give you some back office support, and cooperative leaders across the cooperative, like Camille, who sits on our board and has been in the cooperative space for the past 20 plus years. So for us, we really are bringing a unique set of both business acumen centered in equity, as well as the ability to transition and offer a differentiated thing to the market as far as sellers are concerned. So you might be asking yourself, okay, so these folks sound great, this is awesome, but like, who's backing these? Who's actually bringing the money to the table? So a couple of things. Every transaction that we do, I want to make sure that you hear this, every transaction that we do, we will craft a deal, right? So each new transaction, we will make sure that we align the capital, we align the incentives, and we actually do an outcome that is successful for everybody. But that said, we do raise capital in bulk together through a, generally 30 million or so capital fund, and that is our equity, our dry powder to come to the table with. But that also being said, we have very amazing strategic partners for this specific program itself, mainly Kaiser Permanente, which has provided us with some of the initial funding to actually come to the table and do this programming and actually activate their vendor network. So activate their supply chain in order to offer this as a potential thing for their sellers. They realize that there's both racial equity and as well as economic justice outcomes that can come from a transition to worker ownership. as well as we've got amazing lending partners. So capital providers that are market-based, that are looking at transforming the market. And Seed Commons is one of the strongest capital providers for the cooperative economy that is out there today. And we've got deep ties to these folks that really understand our mission and values and really will be in it for the long haul. So a little bit of the key dates, and then I'd love to open it up for Q&A. I know that was a lot of information, and I see some questions in the chat, so I'll go from there. But March 15th is the application deadline. It's a very simple application process, and you can actually read through the entire, what the step for the actual application slash the ability to do the interview process on the website. But March 15th is a 2-page sort of overview of what your thesis is as an entrepreneur, who you are, what you're bringing to the table. Again, this is not a job. We're not looking for middle managers here. We need you to come to the table and tell us what you think you can make how you can make an impact in an industry. We actually will kick off the cohort itself in April. So 1 month later, we will actually kick off the cohort, and that starts with a 10-week training. And that 10-week training will go through our cooperative management ethos, the ability for us to look at deal sourcing, how we benchmark in the industry, and how we actually go through a deal sourcing. We have a whole deal process sort of out of the box that you can help obviously pick and choose what will work for you within your search, but resources that we can bring to the table. And then your search begins in June. And from June on, you have actually 12 months to complete your search and be able to actually create a deal and exit. So with that, what I'm going to do is actually move forward to our last piece, is our question and answer session. And I'm going to start by answering the things in the chat. So first and foremost, let us go here. And I'm going to, there we go. So Michael, yes, absolutely. I will distribute the slide deck after the presentation. So should have said that in the beginning, sorry, housekeeping item, as well as a write-up about the actual Search Fund Accelerator program as well. So anybody who signed up for this, I'll definitely send that email out. TJ asked, is nonprofit named Obran or a different org? How is grocery delivery? So first and foremost, Obran itself is the worker cooperative. We do have a fiscally sponsored nonprofit project with our sister nonprofit called Democracy at Work Institute, and they are actually the sponsors for this. So they're, we're working in tandem with them to actually create this programming in order to actually be able to offer it. So we ourselves are not a nonprofit. We ourselves are a worker cooperative that actually goes out to the market and distributes equity through our cooperative membership, not a nonprofit. So Kristen said, so people are worker owners of the conglomerate, not their individual workplace. Is that correct? So Kristen, yes, you got it. So specifically, all members, every single person within the cooperative itself is able to actually join the cooperative in order to gain equity in the cooperative. That said, our assets, the total balance sheet of the cooperative, is any business underneath us, including our real estate assets. So this is a chance for any worker, regardless of where they work, to join the cooperative in order to actually gain in equity, have both democratic process at the cooperative level, as well as potentially sit on the board of their business as well. So there is a mechanism both for the cooperative governance, so large scale strategy, entering into new markets, looking at capital, as well as their business level, so their actual workplace level board that has direct democracy over their management and be able to actually challenge their management, as an example. Couple of other questions, I'm moving through it. So pertinent to the racial equity and equity impact, do you have stats on the race and income levels of employees of the acquired companies? Absolutely. So happy to share that out at the end of the, with our follow-up. But we generally look at businesses across the board. So we're sort of from the cooperative lens, we want to make an impact within an industry, both at the business level and then generally at the industry level. So when we're going into a thing, let's talk about home health, part of our thesis is driven by who the underlying employees are. Since Adam is on the line, I'm just going to ask Adam, why don't you walk through a teeny bit of how you actually structured the thesis for your search?
Sure. So the thesis development built upon both the strategic opportunity, the business opportunity, and the mission impact opportunity. So I came and presented forth a thesis that was moving into healthcare, specifically the home-based healthcare ecosystem. So the mission, so the business side is like huge growth arena, right? So healthcare, one of the fastest growing sectors in the economy. Home-based healthcare, the fastest growing segment of it, growing at like a 7.9% CAGR. And then looking at the opportunity for impact, the workers that are in that, the 2.2 million caregivers, these are home health aides and assistants, these are majority women of color and making at or near poverty wages, can't get full-time employment, and are coming home with an average of $13,000 annual salary. Same time, the agencies that are employing them are consolidating national franchises with 15, 20% or larger profit margins. So the opportunity here said, we can make real impact in worker ownership lives, and we can strategically differentiate ourselves. It's a big growth sector. And when we're coming forward with a worker ownership value proposition, it solves a major operating and strategic challenge, which is recruitment, retention, and tenure in the market. So we're coming forward and saying, when I talk to business owners and their biggest challenges is turnover rate, it's an average 70% turnover rate, and we can drop that significantly. You can do some majorly fundamental better operations when you have longer tenure, deeper engagement. And we're seeing that with the other home care cooperatives that are in the space. So we're building a large business, copying some of the existing sort of national growth strategies, but we're doing it in a worker ownership model. And we know all of our employees. We put them through like a rigorous training program that goes with like not only how to do the job of a personal care assistant, but like financial training, how to think like an owner, board training, all those pieces that are going to be like valuable life skills and valuable skills into like a broader career ladder that could start as a personal care assistant and could grow into higher skilled nursing careers or other parts of the cooperative, right? Partnerships into other areas, like we have a burgeoning opportunity in the cleaning sector, and then other areas within our construction space, and the opportunities that you all are going to bring when we come into expanding the broader set of businesses that are in our portfolio. So I really thought about it as, what is the macroeconomic trends? What is the unique business opportunity that we're bringing our special sauce? And then what's the mission impact? What are the number of lives that we can affect? And our 10-year goal is a $200 million business affecting 10,000 worker lives. And that's workers and their families and the communities. We think we can lift wages and really recycle that 15% profit margin back into an equity stake that's owned by our workforce. So that's kind of the overview on how we've developed our healthcare thesis.
Awesome. So I've got a couple of other things in the chat that kind of have the tie-ins to the actual, to that point. So specifically, Brian asked, are there target verticals / sectors or horizontal? So yes, specifically, we operate currently in construction and real estate, staffing, health, and home health specifically, as well as technology. So we have a couple of smaller technology products in the market. What we're really looking for is you, the searcher, to help define where market trends are going, the ability to use those market trends to enter into an industry that is growing and be able to have an opinion and be able to offer that opinion as a way for us to go into a market. So yes, we do have current target markets within our own growth strategies and leaders of those growth strategies. But for us, we want our searchers to look at the blue sky, to be the tip of the spear in a market and create an opinionated stance in order to enter it. So Adam came to the cooperative and completely built the home health vertical from scratch. That's what we're looking for. We're wanting to do an acquisition within a new market that is able to actually expand the opportunity of worker ownership across the board to every industry that we enter. Obviously, there's things like conglomerate fit. mission impact and the ability to affect the lives of our workers that we look at every deal. And we can talk about sort of some of that in an individual session, but really the goal here is conglomerate fit first. We need to be in a market where we can leverage the opportunity that we're bringing to the table and offer a differentiated thing to a selling owner. So that's sort of the answer to the target verticals specifically. And Ryan made a great point. So Ryan, 12 months might be considered a little aggressive by most search standards. What would be the outcome if a searcher does not make an acquisition within that window? So Ryan, we're talking about entrepreneurs here, right? So what we're offering is a stipended search over the course of the first 12 months. If you do not produce an outcome within that first 12 months, then we actually move to the next month, right? So ultimately for us, we're trying to consolidate the window of what your search parameter is that's funded from the cooperative. We will obviously foster activity within that search activity for as long as it takes. We generally like to put a pretty standard blinders on for 12-month searches, just because we also already have partners in the market that are bringing deal flow to us. So this is not a blue sky completely. As an example, Kaiser, we're really already looking into their vendor profile with a basically warm handoff to those potential targets, which will hopefully enable those your search activity to go a little bit faster. But to directly answer your question, your stipend runs out, right? I mean, at the end of that 12-month segment. But at the beginning of it, we set very clear parameters. Our first 10 weeks is you defining that thesis, is you looking at the market, is you helping to create what we are going to do, and then having all of our weight behind you in that search process as well. Everything from interns to the ability to actually go out and do prospecting, to our capital resources behind you in order to actually do the deal, both on a service provider standpoint. So our legal, our accounting, the ability to actually go forward with those resources at your disposal. So we're trying to supercharge your search process, but at the end of the day, you're the entrepreneur and we need you to deliver, right? So hopefully that answers that in the most honest way that I can. Kristen, your question about bylaws. So our bylaws are for members. I can definitely give you a template for how we are structured. Some of the things that are in there, as an example, are investor membership. So I can definitely send that out to folks, but just don't want to, this is not an offer or solicitation for any fundraising activity at all. So, but yes, I can definitely send you that if you email me. And then a couple of other things. So in layman's terms, how do you suggest we talk to family businesses, entrepreneurs, et cetera, about Obran? Best way to connect. So the way that we approach this is a legacy play. So, some of our tools that we provide in this initial 10-week training is just that, role playing, process development. We've talked to hundreds of business owners at this point about our opportunity and, how we can actually frame, as an example, coaching them on how to bring it to their to their employees, coaching them on who to go to in the business first to offer this opportunity to, second, third, fourth, right? So those are some of the tricks or things that we have learned through the process, as well as the software, right? So like we use a mutual action planning software to help folks with deal, a deal data room as an example. So we're dealing with varying levels of expertise when we're talking to business owners, but generally the opportunity is both about your legacy, transitioning, caring for the thing that you created, and really talking to the business owners as, again, our unique differentiated position is we offer the opportunity for them to basically reinvest the legacy that they created with the people that they built the business with and that they trust already. And not through a one-off individual transaction that who knows actually how it's going to pan out, but more so through a conglomerated business that has the weight of the membership behind it. So we are heading towards the end of time, so I'll take a couple more. Best way to connect, so I will go through that in 1 second. How much is the stipend for folks? So we are generally starting our stipends at $60,000, and that stipend itself is actually, again, that 6-month time horizon. The stipend is not meant to offset your entire salary. It is meant to help fund your search process so that you can focus, but not meant to actually completely offset your earnings. And so just being very transparent with you, this is not a self-funded search, nor is this a fully funded search. This is somewhere right in the middle, and obviously we also can help raise money for that search process as well. That's another avenue that we're talking about outside of the stipend, so actually funding the fund, which we can talk about. But generally, that's the starting point for a stipend for that 12 months time. Can you talk about how profits flow up, down between the individual businesses? Absolutely. So first and foremost, the cooperative itself owns every business within the underlying subsidiaries, generally at the very, or not generally, but at least 51%. So that is each group holding. So Adam, as an example, leads the health group holding company. It acquires home health and home care businesses underneath it. So those are the actual subsidiary businesses. And those subsidiary businesses' profits flow up to the cooperative through that group holding. When we raise money, when we're talking about equity financing for a deal, that's at the group level. That's at the intermediary subsidiary level, right? So you in the transaction are actually sitting, and we can sort of go right back up to here. You in the transaction are sitting directly in between the cooperative and its holdings, right? So you participate with the cooperative directly in that group holding company, and every subsequent acquisition underneath it also flows up to you. And so we will want to think about the market and the opportunity past our first acquisition, right? So you're starting this process and building out a group in order to then leverage that initial transaction to build on top of, right? To do subsequent acquisitions underneath it. And again, that's sort of our strategy to grow into that space. Intra-subsidiary, we definitely look at transfer pricing for, as an example, accounting services or legal services or things like that. But generally, we try and consolidate each company's P&L at the company. Where we can consolidate things like HR or employment, we will, just to do group benefits and things like that, which is just a boon for the business underneath it, meaning it's a way for us to decrease sort of cost centers where we can. But generally, you're doing the transaction on a sort of like per company basis and trying to make the case for the acquisition underneath it. So there's nothing different from that in a traditional search, right? From that standpoint. And could an exiting co-op sell itself to the Obran ecosystem? That's a brain breaker, Michael. So generally, we actually do not acquire cooperatives. So overall, our thesis is around acquiring small businesses. So acquiring, operating small businesses that are looking, that are looking for a transition, that are looking for a change of control. But that being said, I guess if a cooperative were to want to demutualize and then join its equity with the cooperatives, that could be a consideration, but generally that's not what we're proposing here, right? So what we're proposing here is a fairly traditional search process that looks at identifying target businesses, acquiring those target businesses through an intermediary, individual group holding that we create as a joint venture with the searcher, and then actually exiting that searcher itself within 5 to 7 years through a maturation of equity of the underlying assets. One last question, then I'm actually going to wrap up here. So can you talk about how Obran is thinking about the market opportunities versus individual writing the thesis as part of the decision to bring someone into the cohort? Said differently, opportunity versus right individual. Got it. So here we're actually going to look around again at who we want as a searcher versus the thesis that they're delivering. So who we want as a searcher is an entrepreneur that can do a transaction and lead the company, an operator. We don't need M&A advisory, right? Like what we need is somebody to be in the trenches with us day in and day out for 5 to 7 years growing a thing, right? That is agnostic to the actual business, the underlying asset that they're driving, right? But we definitely see that this is driven by a thesis. And so the first step in any of this process is creating that thesis. But it is not solely just to create the thesis and deliver that and walk off into the sunset. The goal here is the real upside for you, the searcher, comes when in 5 or 7 years you've grown a $20 million top line business to $70 million and you take a piece of the pie, right? So like just pure dollars and cents alignment there, we want to actually incentivize growth in the business more so. and with the idea around our equity, both financial and social equity, or sort of like member equity in the meantime. So hopefully that is a little bit clarifying from opportunity, which is thesis, to the right individual, which is an entrepreneur. Why not have Obran act as a co-op if co-ops of co-ops, and let each group of workers own their own company? So Ellen, this is a great question. And we'll actually end on that question. And TJ, you can just look on the website for the application process, and we'll go from there. But so why did we not decide to mutualize, or sorry, to federate? Right. So again, we looked at the federated cooperative model and the individualist cooperative model. And so really, let's end on this piece. We believe in two things. First is that workers, regardless of industry, regardless of if you're a tech worker that makes $150,000 starting salary in the market, or a warehouse worker in middle America that makes 25, your contributions to the cooperative itself is your contribution, and your value that you deliver at your firm, at your company, is, yes, valuable to you, but it's also in solidarity built with everybody else in the conglomerate, in the cooperative. We wanted to tie all of our heartbeats to the same thing, right? We wanted to make sure that we're building one big cooperative conglomerate that allows us to leverage balance sheet across the businesses, leverage our opportunities to make intra-subsidiary purchasing and intra-subsidiary career ladders possible. We want to build both the entrepreneurial ecosystem of people going out and doing searches like we're talking about today, but also the entrepreneurial ecosystem internally of starting new businesses, of looking at branching out into new market segments and opportunities, and catalyzing that through one place of equity, through growing the growth of the conglomerate overall, not individual workplaces, and generally looking at solely tying equity to one workplace. Control or governance is different than where we want solidarity and an economic benefit to come from. Both need to be considered, and the way that we're tying them together is through the cooperative conglomerate thesis. So I'll actually end there, and sort of like what our mission in life is that we really want everyone to own their own work. Searchers, entrepreneurs get it just day one. You own your outcomes as an entrepreneur. We think that that's an amazing thing, but we recognize that there's inequality and inequity in the world. And so we want to leverage our structure, our way of being, our actual mechanisms internally to make that opportunity viable and an option for everybody, right? And as well, we see that there's value in ownership. We see that there's value in education, and not just solely in one workplace, but across those workplaces, overall. So our next steps, and what I would love for you all to check out, is the Search Fund Accelerator process, the actual key dates that you need to consider. The March 15th deadline for the application is right on the website right there. I will be sharing this presentation and recording out on that website as well, so that you can download, check it out, ask questions. I'm happy to also take in individual requests for time. Please do just email me, joseph@obran.org. I'm happy to take sort of one-on-one Q&A sessions, but really I'd like you to take a think on your side of what is your differentiated thesis? What type of impact do you want to deliver into the world, and how can you actually catalyze worker ownership across the United States? This opportunity generally is for the United States. We have had some inquiry about Canada, and we'll definitely consider Canadian businesses as well, but generally this is for a United States context. Thank you so much, and look forward to hearing from you. If you have any questions, my information is right there. All right. Thanks, everybody.